Hello all, welcome back to yet another session on a topic of dissolution of a partnership firm. In our previous session, we have discussed majorly on the topic dissolution of partnership. Now, and some points along with dissolution of partnership firm we have studied. Now, again, we are going to study on a topic dissolution of partnership firm. Basically, as we have discussed earlier, a dissolution of partnership firm, a problem may be based on simple dissolution. The some problem will be based on Garner versus Murray, and some problem will be based on all partners insolvent. These are the major three. Apart from this, there will be a piecemeal distribution problem. Now, when we come across for the dissolution, what we have studied, dissolution means what? I just want to be in interactive session. Dissolution means what?
Closing down the company or
Closing of the firm
company.
or closing of the firm. The firm will not able to continue. The firm is going to cease. Cease means the firm business is going to stop. So, shall I say dissolution of partnership firm is means closing the books of the firm. Shall I say closing the books of the firm or closing the accounts of the firm? Sir, closing the book of the firm means journal needs to be closed. Shall I able to close the journal? No, right? The journal will not close. The journal will transfer to ledger and we will only close the ledger accounts. So in dissolution of partnership, we will close all the ledger accounts and we will pay the assets, we will sell the assets, we will realize the cash. From the realized cash, we will pay the liabilities to others. So it is closing the books of the firm. Now, come to the next point. Sir, for dissolution of partnership, one account will be open. No, what is that one account? What is that one account? Which account should be open for asset transfer and liability transfer?
Realization.
Okay, you are saying it is realization. Why it is realization account? Why I should prepare realization account? That's a question here. Why it is realization account? Why it not some other account? Why should I prepare realization account? It means
Realize the value, sir.
to realize the value, right? Whether it is necessary to open a realization account. Is it mandatory to open a realization account in practical scenario? Just take away your exam-oriented view. Just come to a practical scenario. Is it necessary to prepare a realization account? The answer to the question is not necessary. Is it not necessary? I will tell you. You are having a machinery in your books now, furniture in your books, stock in your books, debtors in your books. Everything you are in your books, right? In the books of the firm. Closing of the ledger means I should prepare machinery ledger. I should prepare furniture ledger. I should prepare stock ledger. In the same way, I will have creditors now. I will have bank loan. Okay, bank loan. Or there's two types of major liabilities we'll take. Or bills payable. Everything we will take. So I will prepare individual accounts. All the individual accounts will be gets closed. Okay, and I will derive a profit or loss. Is it right? If I'm going to close, either it may be a profit or either it may be a loss. Everybody understood from this? Am I right?
Yes, sir.
If I'm going to sell, yes, that's a point. Good. Now, all the partnership firm, if they don't want to open a realization account, they will close all the ledger balance. Think from a point of view of a partnership. Partnership will have how many number of assets? They individually close all the ledger balances and they will prepare one register. that register is known as sales register. From the sales register, they will enter machinery, profit 10,000, furniture, loss 2,000, stock, profit 5,000. Like this, they may prepare. Is it not necessary to open a realization account? But to simplify the process of an accounting, all the asset balance will be transferred to one account known as realization account. For the transferring purpose only, we are having realization account. In the same way, all the liabilities will be transferred to the realization account on the credit side. You know, to open realization account. Why you should open a realization account? That's a point here. I will not prepare 100 ledger accounts. If the company is going to prepare 100 separate ledger accounts and they are going to transfer in a sales register, realization account is not mandatory. Or asset register, realization account is not mandatory. As for the simplification process, they will transfer all the assets to the realization account and all the liabilities to the realization account. Are you able to understood?
Yes, sir.
Yes, sir.
Yes.
Yes. Now come to my next question. Next point. Suppose while solving a realization account, while solving a partner's capital, while solving a dissolution, you will prepare majorly, you will focus on two accounts. What two accounts? One is real account. Next one is personal account. You will never ever worry about nominal account. What is a nominal account? Nominal account is an expenses and income that is already gone to the P&L. Now you are closing the firm. While you are closing the firm, you will focus on real accounts. You are focused on personal accounts. Real accounts in the sense you are focusing on the assets, debtors, whatever the case may be. If it is in case of personal account, you are focusing on the creditors, bank loan, debtors, like that. Okay, your only focus will be on real account and personal account. Okay, then come to our next point. While solving a dissolution problem, you will prepare three accounts. First one is realization account. Next one is partners capital account. Third one is cash or bank account. These are the three ledger accounts which we will prepare in case of dissolution of a partnership. And I will give you one more thing also. While solving a problem of dissolution of a partnership, cash and bank account will get tally. How it will get tally, sir? I will give you. Let's say this is your balance sheet. Okay, this is your asset, machinery, 10 lakh, furniture, 5 lakh, then sundry liability, 3 lakh, capital, 10 lakh, reserves and surplus, 2 lakh. Now balance sheet gets tally now. Is it getting tally? 15 lakh, 15 lakh. Tallied or not? Is it tallied or not? Yes. Now,
Yes, sir.
what is a dissolution? You will sell all the assets. Let's say you will sell this assets at a book value. Let's say at 15 lakh. Now, you will pay this liability 3 lakhs. 15 lakh is gone, minus 3 lakh. 12 lakh is there. This 12 lakh. What you will do? This capital account, this reserves and surplus account of 10 lakh, 2 lakh, you will distribute it to the partners. From the partners, you will get a balance. So this 12 lakh will equals to this 12 lakh. Okay, always cash and bank account will get tallied. And I will give you one more scenario. Come to this realization account. Suppose the machinery at a value of 10 lakh, furniture at the value of 2 lakh, sundry debtors at the value of 1 lakh. Now it has got sold at 11 lakh. Now it is got sold at 1 lakh. Now the sundry debtors are closed at 98,000. Like this you are having. All the book values will transfer on the debit side. Now you need to realize it. If you want to realize it, you will realize it in cash or you will realize it in bank. Whatever the realization value, you will show it on the credit side. Okay. First entry, while having an asset balance, transferring it to realization account, how the journal entry will be? You are transferring the asset to some other account called realization account for the selling purpose. Okay. So, what is the journal entry you will pass? Realization account debit to asset account, right? Now, all the assets comes to a realization account. Once all the assets comes to a realization account, you need to sell that asset. If you want to sell that asset, now asset is completely gone. Now asset is completely gone. You are never going to use the word assets. Hereafter, you are only going to use the word realization. Because you already transfer all the assets into one account called realization account. Now you need to sell the values. Now you need to sell the asset. All the value will be shown on the book value or the balance sheet value. Okay. Next, the second process will be, now you need to make it in cash. What is the journal entry you will pass? You are posting on the credit side. You are getting the values on the credit side. Simply, what is the asset entry you will pass? Asset sold entry, what you will pass? I sold the asset, pa. What is the journal entry you will pass? Simple journal entry. Don't think from a point of view of dissolution.
Cash account debit to asset account.
Cash to account to asset account. Apa? Here, already asset account is gone. You have already transferred to realization account. Now all the assets will be in the realization account. Now what is the journal entry? Instead of asset, you will put one account called realization account. Realization account, this journal entry should be at the revised values. Whatever the revised value is there, you should pass it to the revised values. And whenever you will get closed, you will end up with the profit or you will end up with the liability. If you end up with the profits, all the profits will be transferred to partners capital account. All the losses will transfer to partners capital account. Okay, same in case of liability. What is a liability having a credit balance? Now you are transferring everything to one account called realization account. Now what is the journal entry at the time of transfer you will pass? What is the journal entry you will
Liability
pass?
account debit to realization account.
Liability to, now liability balance comes down. If the liability balance comes down, you are going to debit it. Liabilities account debit to realization account. New account got created for a temporary purpose for the dissolution. This is done. Now you need to settle the liability. Now you need to pay the liability. If you are going to pay the liability, what is simple journal entry? If you are paying to a creditors, what is the journal entry will pass? Creditors, and if I borrowed amount or if I borrowed a bank loan, why I want to confuse with creditors? Bank loan, I borrowed 10 lakh. Now what the bank will say? Now the bank will say, or we will only going to pay at 10 lakh rupees. Now what is the journal entry for repayment of bank loan? What is the journal entry you will pass?
Bank loan account debit to cash account.
Bank loan to cash. Now comes to the point of view of a partnership. Bank loan to cash you will pass. That is in a normal scenario. Now your dissolution of a partnership firm. Okay, bank loan at the time of transferring, it is transferred to realization. Now realization account as having a credit value. Now this credit value going to comes down. So you will debit the realization account debit to, you will pay in cash account. So the journal entry will be realization to cash at the time of settlement of a liability. Then liabilities to realization. This is at the time of transfer of liabilities. Okay. Suppose, sir, I will give you one more thing. This 10 lakh, 15 lakh. Instead of selling at 15 lakh, I'm sold at 16 lakh. How will you do? Now the question will arise, sir, 16 lakh, sir. Sundry creditors or loan is 3 lakh, sir. Now 30 lakh is I am having in my hand, sir. But you said it will get tallied because capital account is 10 lakh, reserves and surplus is 2 lakh. How this 1 lakh, sir? This 1 lakh, that's how you prepare a realization account. From a realization account, either you will end up in profit. This profit gets transferred to partner's capital account. Partner's capital account got tallied. Instead, you will add. It means what? You are creating a partner's capital account means you are just adding a 1 lakh to a capital, right? 1 lakh to a capital. So the partner's capital account 1 lakh will got deleted. So at the time 13 lakh will get tallied. Anyhow, in your question of dissolution, cash and bank account will get tallied. It will get balanced. Or else you are doing something wrong. Your question is something wrong. Are you able to understood this realization account?
Yes.
Are you able to understood this realization account?
Yes, sir.
Yes. Now, come to a next important. Suppose you are having a balance sheet of fixed assets. Let's say if I want to write it, machinery, furniture, stock, debtors, machinery, and cash. Next, come to here capital A, B, reserves and surplus, creditors, bank loan. These are the items given in your balance sheet. In your exam point of view, these are items in your balance sheet. Whenever, whatever I say, whenever you are approaching a dissolution, you should prepare 3 accounts. What is the first account? Realization account. Your second account will be partners capital account. Partners capital account A, B, A, B. Now third one is your cash account or bank account. Suppose whenever the dissolution problem will be tested for you, you should prepare the 3 accounts. Those who are taking coaching under us, they know we will follow simultaneous method. What is a simultaneous method, sir? In school, you have prepared realization account separately and then come to partners capital and then you will go to bank and then finally if you want to tally, you will prepare it and close the bank account, cash account. Here in professionals, you will do simultaneous method. You will do double entry posting. Whatever the items needs to be done, you will put it and you will close it. Okay, now come to the point. Come to the most important part. That is, whatever machinery values that this machinery, furniture, stock, debtors, this all 3, all 4 put together will transfer to realization account. How will you write? To machinery, to furniture, to stock, to debtors. This everything should be shown at book value. Okay, you are having a cash account. This cash account we will transfer to cash account by to balance brought down. Now, capital A, capital B. A is capital, B is capital. We will write down by balance brought down. A is capital, B is capital. We are having a reserves and surplus. This reserves and surplus will be transferred to partners capital in profit sharing ratio. So it will get transferred to profit sharing ratio, reserves and surplus. You are having a creditors and the bank loan. It is an outsider's thing. So this will get transferred to realization account. You will write down by creditors, by bank loan. Like this you will write. Then I will come to one more thing for you. Important thing. If I give P&L on the debit side, make it as an important. If your question having a P&L account on the debit side, it means you are having a loss. Sir, you said all the asset balance and all the to capital realization account. Shall I transfer this P&L loss? You should not do. Why you should not do? How I can realize the loss? How I can realize the loss? Either I can sell the loss or either I can purchase the loss. How I can do it? Is it possible to purchase the loss or is it possible to sold the loss? To cancel the loss? Is it possible?
No, sir.
No. Then we will transfer this P&L loss to partner's capital account. We will transfer this P&L loss to partner's capital account in their respective PSR, profit sharing ratio or loss sharing. PSR means profit and loss sharing ratio. So I will write down 2 P&L in brackets. I will write down loss and I will transfer the amount in the ratio of PSR. Next, these are the whatever you are done. The step is now balance sheet is done. You are transfer everything to the individual accounts. Now this balance sheet is over. You never ever see this balance sheet hereafter. So this process, what you are doing is known as dismantling of the balance sheet. This is what I have given in yesterday 5 steps. That's how I am explaining it. I'm not in a single line. This is what dismantling of a balance sheet. Now dismantling of a balance sheet is gone. Okay, everything is gone. Hereafter, you are only going to focus on these 3 accounts. All the assets you get transferred, no? This assets needs to be realized. It needs to be sold off in the market. It needs to be sold to other person. Now, you need to sold the asset. At the time of selling the asset, what is the journal entry you will pass? Cash to realization. You will write down by cash. You will write down by cash and you will write the values over here. In same case, you will write it here to cash. You will write down to cash. In the same way, here you will put by cash account. Here you will put to cash account. Here, whenever there is a realization, you will prepare 2 working notes. Working note number 1, working note number 2. Your working note number 1 consists of asset realized. Your working note number 2, yes.
So in cash account, we have to put by realization account, no, sir.
Yeah, fine. Sorry, by realization account to realization account. So whenever you come across with realization, you will prepare 2 working notes. One is for asset realized and the next one is for settlement of liability. Settlement of liability, you should not write liability realized. You should write settlement of liability or paying of liability. Okay, you will prepare machinery, stock, debtors, values, right? Creditors, bank loan, values you will write. You will get a total. This total will be transferred to the respective accounts in working note 1 and working note 2. Here also you will put working note 1 and working note 2. So whatever the process you are doing is known as disposal of assets and liabilities. Disposal of assets and liabilities. Okay, now disposal of assets and liabilities is done. Here, in some question, they may give you the concept of suppose they say missionary is taken over by the partner B. Like say they have given missionary taken over by the partner B, or the liabilities taken over by the partner B. Okay, so in that case, at the time of disposal, this is happening. Okay, at the time of disposal, what journal entry you will pass? At the time of disposal, what journal entry you will pass? Of asset. Don't forget to add the word asset. Disposal of asset. What is the journal entry you will pass? Is my
Realization
voice
to
is
asset
audible?
account.
How it is asset account? I am saying about the disposal. Yeah, disposal. Already it is first thing is dismantling. Dismantling you will transfer the entry realization to asset. Okay, now asset account is gone completely. It is only there is a realization account. What is the journal entry you will pass?
Cash or bank to realization.
Cash or bank to realization. Here the point is you will not generate any cash. Your partner will take over. Now what you need to put? Instead of cash, you will put partners capital. Instead, what you need to put? Partners capital account to realization account. Suppose the partner, they may say the partner will take the liability. At the time, what is the journal entry you will pass? Realization to partners capital account. Realization to partner capital in case of liability. Partners capital to realization in case of asset. Are you okay with this? With that concept? Yes. Whatever is taken over, the third is takeover of assets and liabilities by the partners. This is your third step in the dissolution problem. This will be your third step in the dissolution problem. Next, come to your fourth part. Fourth part is another important part. That is, once it gets transferred, you will end up in profit or loss. You will end up in profit or loss. If you end up in profit, you will transfer to partner's capital account. If you end up in loss, you will transfer to capital account. So the fourth step is transfer of realization profit or loss to partner's capital account. Now, whatever the profit, if it is a profit, you will transfer it on the credit side. If it is a loss, you will transfer it on the realization loss, you will transfer on the debit side. Realization profit, you will transfer it on the credit side. One gets done, you will tally the capital account. You will end up balance here or balance here, or two partners will get, one partner will get balance here, second partner will get balance here. If you have three partners, two partners will having a positive balance, one partner is having a negative balance, deficiency will be there. So when this arise, you should transfer this to cash or bank. This loss transfer to the credit side. If it is a profit, you will transfer right down to partners capital account by partners capital account. Whatever the process you are doing, this process is a settlement of accounts. Settlement of accounts. Settlement of accounts. So tell me, what is the first step? What is the first step? dismantling of the balance sheet. Second step, disposal of assets and liabilities. Disposal of assets and liabilities. Third step, taken over of or takeover of assets and liabilities by partners. Taken over by assets and liabilities of the partners. Fourth one, transfer of realization profit and loss, realization profit or loss to partners capital account. Fifth one, settlement of accounts. So these are the 5-step approach which you will follow. One is dismantling of the balance sheet, disposal of an assets and liabilities, taken over of assets and liabilities by the partner. Fourth step will be a realization of profit and loss of the partner's capital, and settlement of liabilities will be a first step. Whenever we used to watch a movie before the visualization, we will use the term DTS. The same DTS means digital data system. The same is applicable here. Dismantling of a balance sheet, disposal of assets and liabilities, taken over of assets and liabilities, transfer of realization profit, and settlement of accounts. If you follow this 5-step approach with double entry system, simultaneous posting, this 5-step approach, the balance sheet, your capital accounts will get tallied, your cash account will get tallied, and your capital accounts will get balanced. Realization profit will be there, and one is done. Okay, if you follow this 5-step approach, you will easily do it. Are you able to understand? Are you able
Yes,
to
sir.
understand? Yes, but with this, dissolution of tax sheet is not at all over. I need to further discuss with few more points, which is crucial for your adjustments and all. And the simple dissolution problem concepts will be over, and then we will move on to a concept related problem. Just a minute. Those who messaged me, I could not able to understand who has messaged me.
Class A class.
Yes.
என்ன class நடக்குதா?
Who has messaged me? I have a doubt. Next. Here the few points needs to be discussed. Crucial points needs to be discussed on the topic. The one thing is, suppose in the balance sheet of the firm, there will be a capital account A and B. Let's say we will take this as case 1, case study 1. Capital account of A and B is given. And in the loan column, they have given Mrs. A. Now, tell me, this Mrs. A is A's wife. That Mrs. A loan has been given to the partnership firm. Now, this loan should be transferred to which account? This loan should be transferred to which account?
Realization.
It will transfer to realization account. On which side? On which side?
Debit side.
Credit side.
Credit side. Credit side you write down by loan from Mrs. A. That dismantling of the balance sheet problem, you will do it this. Now, come to disposal of assets and liabilities. Is my voice is perfect?
Yes, sir.
Yes, sir.
Yes. Yes. Suppose in disposal of assets and liabilities, If nothing is mentioned in the question, what you will do? Any value is not given. Let's say here the loan value is 1 lakh. You will transfer 1 lakh. In a given question, nothing is mentioned about the loan. Whether you will settle the liability or whether you will not settle the liability. What is your basic point of view? What is your base accounting point of view? Whether you will settle that liability or you will not settle the liability.
Settle the liability.
Settle the liability. At the time, you will write down to cash account. To cash account. This is a usual entry you will do. Here you will write down paid to Mrs. A. You should not accept Mr. A capital. Okay. Now come to case 2. In the same case 2, balance sheet, capital A, capital account of A, and capital account of B. Let's say capital account of C. Now, loan. Same Mrs. I want to change it. I will change it to Mrs. B to have some better clarity. Okay. This is Mr. B's loan. In the same way, at the time of dismantling a balance sheet, you will transfer to which account? You will transfer to which account? Realization account. On which side? On which side? Credit side. By writing by loan from Mrs. B. Let's say the value here, to have a clarity, we will take 2 lakh. We will take 2 lakh. Okay. Now, next part. While selling this, there is a specific adjustment given. Let's say Mrs. B loan has been taken over, by Mr. B. Now, what adjustment you will do? You will show it in realization account. Will you show in realization account, by the way, cash?
Capital.
Capital account, because Mr. B is going to take over. Okay, so you will write down to B's capital, because B will take over. Okay, taken over. Immediately you should open a capital account of B and you should write down 2 lakh over here. Okay, 2 lakh over here. It has been taken from the B's capital. Okay, it has been taken from the B's capital. Okay, this is your case 2. Now, come to your case 3. Same balance sheet. Here I will include only 2 partners. Capital A, capital account of B, and loan Mrs. B. Here I am having an assets, all assets, and you are having A's capital account or A's loan account. Now, you say, now while doing a dismantling, what you will do? While doing a dismantling for realization account, what you will do? You will transfer all the assets, right? You will transfer Mrs. B loan. Let's say Mrs. B loan has been paid. Loan to be paid, not to be taken over by any partner. It's to be paid. So you will write down to cash. Here you will write down by cash, the realization account. Here the part is A's loan account. The company is going, the firm is going to get closed, right? So if the firm is going to close, this A's loan account, shall I transfer to A's loan account? And then I will write down by cash account. Shall I write it in this way? Shall I write now?
No, sir.
Why? I can do now, so it is all the asset. So I can transfer this and I will pay this. Is it possible, right?
No,
Is
sir.
it possible or not?
No, sir.
Why?
He is a partner of that firm. So
Okay.
we should
He is a partner of that firm. Very good point. Okay.
then we should
Hmm.
transfer to his capital account.
It should be transferred. Why it should be transferred? That's a point. You are saying it, right? It is A is a partner. What means on the asset side, A's loan account is appear. It means what? First, let us understand that. In balance sheet, on the asset side, if A's loan account is appear, it means what? It means firm
Loan given to A, sir.
given to A. It is a loan given to A. In your question, they may give you different words. They will play with different words. Advance given to A, advance customer, advance given to a partner A, and current account of a partner A's current account. In sometimes debtors, maybe, is it possible or not? I will give you one case. Give me a solution. AB is a partnership firm. A is also having a separate business. Is it possible? A can be in one partnership firm and they can do it in another way.
Yes, sir.
Yes. A as A and B is a partnership firm selling the goods to A. Is it possible? Selling the goods, A and B is doing a business, selling the goods to A's business, to the A person. Okay, to the A person, they are selling on the credit basis. Is it possible?
Yes, sir.
Yes. At that time, A will automatically become a debtor or not?
Yes, sir.
Yes. So in your question, they may give you A can also be a debtor. In the same way, A is having a business. A and B partnership firm, can it purchase from A? Can it purchase from A? A and B is a firm, they need some goods. Instead of purchasing from others, they will purchase it from A itself. A will get some cash. They will enjoy very good profits and all from the same company. He is a company A and B, he is a separate person. So this will do. At the same time, he may also be a creditor. Okay, they may give you. So suppose why, the answer is you should transfer to capital account. That the question is why. Suppose if you transfer this A's loan over here, A's loan over here, and you will dispose it off over here, you will pay it off over here, it will end up in loss to the firm. Is it right? A's loan, A's is a partner is a capital. Okay, A is a partner, he is also putting a capital, and he firm also given a loan to A. Suppose if I put it in realization account, the other partner B will suffer because the whatever the profit or whatever the loss is given to you, it should be distributed among the partners A and B. It should be distributed to partners A and B. Is it right? On the basis of PSR, we will transfer, right? So at the time, let's say if I not put the A's loan account, my profit will be 1 lakh. After putting A's loan account, my profit will be 50,000. Even though I am making a profit, but I am making a reduced profit of 50,000. So A will take 1 lakh also. He will also enjoy the reducing profit in the profit sharing ratio also. So B will suffer. So for that matter, A's loan having a debit balance, it means on the asset side value, it should be transferred to capital account. It should be transferred to capital account. Whose capital account? A's capital account. A's capital account. Are you able to understood? So, whenever there's a partner A, partner B, A is having a capital of 1 lakh, B is having a capital of 2 lakh. And B is also having a worth of 20,000. Now, 2,20,000 I need to pay. 2,20,000 I need to pay. So, whenever there will be receivable or there will be payable, there will be receivable. Both will occur at the same time at the same person. Because for 2 lakh, I need to repay to B at the time of closing. Is it not? Is it right or not? Is it right or not?
Yes, sir.
At the time of dissolution, at the time of closing the books, whatever the value I adjusted, I need to pay to them. Okay. And then I need, instead of after paying them, I need to collect 20,000. Right? As I need to receive from B or I need to receive from A. So here I will mutually set off. For that matter, for mutual set off, I will transfer to capital account. Are you able to understand this beautiful concept? Why it is transferring to capital? Why it is not realization? Are you able to understood?
Yes, sir.
Yes. Now,
Sir, sir.
yes.
Sir, why A's capital is 2,20,000?
No. I'm saying because, sorry, A's capital, it is 1 lakh. Sorry, it is 1 lakh. It is 2,20,000 B. Is it fine?
Yes, sir.
Yes, that's fine. Okay. Suppose I will come to another concept which I little bit forgot about discussing on realization account while solving that assets and all. Suppose in my balance sheet, there is furniture, there is debtors, there is stock, one more asset, building. This is done. This items is done. Just take about it. There may be a scenario that, let's say, 2 lakh, 2 lakh, 2 lakh, 2 lakh. For my easy purpose, it will be 2 lakh, 2 lakh, 2 lakh. So total 8 lakh. Here, this 8 lakh, I will put 6 lakh over here. A and B, 3 lakh. 6 lakh is gone. Then I will put loan 2 lakh. Now balance sheet gets tallied, right? Suppose in your adjustment or in a partnership firm, there may be a machinery. A machinery worth of 1 lakh not recorded at all. What does it mean? In physically, they are having a machinery. Physically, machinery is there. Physically, machinery is there. But they never show it in the books of accounts. They never showed it in the books of accounts. They missed it. Or intentionally or unintentionally. Unintentionally, it doesn't happen. Intentionally only it does happen. Okay. For machinery, 1 lakh they never touch. Okay. This like this kind of question is given to you. For that, the same, whatever I say for asset, the same is applicable for the liability also. It is in case of the concept is known as unrecorded assets, unrecorded liabilities. So the concept is here you will follow two-step approach, two-way approach, first approach and second approach. In any one approach you should follow in your exam. That is, first, the asset is not at all recorded. The asset is not at all recorded. You will record that asset. You will record. Previously it is not there. Now you need to record it. What is the journal entry? You will pass. Now, what is the journal entry you will pass? I am asking you, the people, those who are in the live class, what is the journal entry you will pass for the asset recording entry?
Asset account debit to cash or bank account.
How it is cash or bank, madam? How it is cash or bank? Asset account debit is right. How it is cash or bank? Whether I am paying it? I am not asking you the purchasing entry. I am not asking you the people for the purchasing entry. Here my question is, what is the entry to record that asset in the books?
Asset account debit to capital account.
How it is capital account?
Cap
Why it is capital?
Realization.
Why it is realization? My question to you is, first thing, you need to show it in the balance sheet first. Then only you will take it to realization. Then only you will dispose. That's the approach. At the time of recording that asset in the balance sheet, what is the journal entry you will pass? Asset account debit is obviously going to be there because asset balance is going to be there. At the time of purchasing, I may pay it in cash. At the time of recording in my balance sheet, the journal entry will be asset to, let's say, before in my balance sheet, there is not at all value of machinery, right? Machinery only, right? There is never not at all recorded the machinery account, right? Now I am going to record it. Machinery account is going to be debited. Instead, I am going to withdraw any cash over there. No, cash is not going to over there. Anything I am not going to withdraw from my cash balance or nothing is going to be happen, right? Is it right or wrong?
Yes, sir.
Yes.
sir.
It means whatever the amount I am recording over there, it is my profit and loss account. Whatever the value I'm going to record, it is machinery to P&L because it is a profit. Is it fine? Now machinery is recorded in your second step. Now dismantling of the balance sheet concept will comes. Now what you will do machinery? What is the journal entry you will pass? Realization to machinery you will pass. 1 lakh, 1 lakh you will pass. Now what's the third step? Disposal. What is the disposal you will pass? Disposal. What is the entry for disposal you will pass? Cash account debit to realization account. 1 lakh, 1 lakh. Okay. If you do it like this, already profit I booked. Already profit is on the credit side. Okay. And I am transferring the asset to the realization account. And I am realizing it in cash. Okay. I am realizing it in cash. So obviously what will happen? Machinery account gets cancelled. Realization account gets cancelled. Simply the entry will be cash account to profit and loss account. You able to understand this part?
Yes, sir.
So this is a one-way approach. What you can do? What is the net effect of the first approach? What is the net effect of the first approach? I am end up in a profit, right? I am end up in a profit. So in the same second approach, the simple entry I will directly dispose of, not even dismantling. I am not going to want to show it in a balance sheet, then transfer to realization, then dispose. This, if it is or like you eating, this is not there. You simply do one thing, directly eat like this, then directly transfer it in a disposal. Suppose here, let's say the same concept I'm going to teach you. 2 lakh, 2 lakh, 2 lakh, 2 lakh is there. So total 8 lakh is a transfer entry. Is it right? Asset transfer. Just try to, as for the time being, loan, try to remove. Capital, just avoid it. Just focus on the asset. Asset transferring, it is 8 lakh. Is it right?
Yes, sir.
Same, asset can realize at book value. for your example understanding purpose. Asset is also realized at book value. What entry will pass? To cash, sorry, by cash, by cash, 8 lakh. It is realized at book value. Realization is at book value. Now, you unrecorded, you forgot to record one thing. That is what? Machinery. Record the unrecorded asset here. What is, how much? 1 lakh. Now, if you are going to close the balance sheet, here it will become 9 lakh. Here it will become 9 lakh. Here the balance will become 1 lakh. 1 lakh rupees is what? Profit. Profit will be distributed to A and B. Are you able to understood?
Yes, sir.
Yes. Instead of doing 1, 2, 3 and all, you do only one thing. That is directly disposed of. Are you able to understood? So in your exam, you will follow this second approach. In exam, you will follow the second approach. Same in case of unrecorded liability. Unrecorded liability, you were never ever recorded. Now you are going to record it. So it will be P&L. It is a loss for you. Never inflow, outflow is there. So it will be profit for you. So P&L to liability, I will record it as creditors. Now you will transfer creditors to realization. Now it will be realization to cash. Instead of doing this matter, I will do only one thing, that is creditors to cash. Are you able to understood?
Yes, sir.
Yes. Everybody understood with this concept? So here, if I want to summarize it further, we have discussed basically what is simple dissolution. Basically, there's three majorly: simple dissolution, Garner versus Murray rule, all partners insolvent. What is the dissolution? Dissolution means closing the books of the firm. Closing the book of the firm means we are not going to close the journal entries. We are just going to close all the ledger accounts: sales, purchase, creditors, debtors, asset account, liability account, everything we are going to close. At the time of, all the expenses will get closed and transferred to the P&L itself. From the P&L, you will prepare P&L appropriation, every and all. That's different story. If the firm is going to continue, now you are going to close. It means you need to sell all the asset. You need to settle all your liability. Okay. For that matter, we will prepare one account for realization account. It is not mandatory to prepare a realization account if you are following a register method. If you are following a realization account, you will transfer all the asset balance into one single account for your administrative purpose, for your ease purpose, is known as realization account. Transfer all your liabilities on one account on that credit side. In your exam, they will give you, they may not be able to give you 100 ledger accounts, no. So what they will do? They will give it in a single column, in a single format known as balance sheet. Are you able to appreciate this? Shall we move on? So at that time, we will pass a journal entry for transferring from balance sheet to realization account. Will pass an entry realization to asset account, while disposal will pass an entry cash to realization at the revised values. Now, same in case of liabilities also, liabilities to realization and realization to cash. Now, the concept what you are doing by transferring the items to the other respective accounts is known as, from the balance sheet is known as dismantling of the balance sheet. From the dismantling of the balance sheet is then, from the realization account, you need to dispose the assets and you need to pay your liabilities. The concept is known as disposing of assets and liabilities. Once the disposal part is done, any assets which is given or any liabilities which is taken over by a partner, you should transfer to the respective accounts. So that is known as taken over of assets and liabilities by the partner. Third step. What is the fourth step? Once it's all this process is done, you need to find out the realization profit or loss. Once you find out the realization profit or loss, that realization profit or loss should transfer to the respective partner's capital account. Once this fourth step is done, fifth step is your settlement of liability. Once the settlement of liability is done, firm is closed, you can go anyway. You can go wherever you want. Now, whenever you sell the assets, you will prepare one working note. Whenever you will settle the liability, you will prepare second working note. Is it mandatory? You will prepare. Or else if the question doesn't specify anything, it is not mandatory. But in your examination perspective, if you want everything needs to be perfect manner, you will prepare it. Okay. This is a 5-step approach. In short, we will call them as DTS. Now, come to a crucial case loss for case 1. For case 1, if the loan is from the partner's relatives or partners, that is Mrs. A. Here, whenever the loan is on the liability side, loan is superior than the capital. You should not transfer to the capital. Okay, loan should be superior than the capital. So your first priority should be given to loan, first priority on loan, second priority on the partner's capital. You will treat the Mrs. A as an outsider. Okay, now come to case 2. Suppose the loan is from Mrs. B. In the same way, that loan suppose is taken over from Mrs. B, Mr. B. At the time, you will transfer to B's capital. Okay, if question doesn't specify anything, I will use the word Q or SA. Q or SA means question remaining silent, assume, or question remaining silent, answer. What you need to answer or what you need to assume. It is paid. The loan is paid, repaid. If there is any specific information given in the question, it should be transferred to Mr. B. Okay, in what partners will taken over? Even in some worst cases, A partner may they also taken over in the question. You will put it on A capital. That's in matter. Then case 3. Case 3 is what? Case 3. Suppose loan account is appear on the current account is appear on the credit side. So it means it is on the asset side. Asset side means you will directly set off with your capital. What the partner A will tell? You need to pay me 1 lakh now. Just take it 10,000 from this. Set off entry will pass. Okay. Now the set off entry will pass. Suppose if there is any unrecorded asset, any unrecorded liability, there will two-way approach. We will follow a second approach, that is directly transfer the values to the realization account on the credit side. If it is an asset, if it is on the liability, you will directly transfer to the credit side. Sorry, debit side. Any unrecorded asset, it should be transferred to credit side. Any unrecorded liability should you transfer to debit side of which account? Realization account. Of realization account. Are you able to understand? Are you able to understand this? Yes. With this, the concept behind dissolution of a partnership, simple dissolution is done. We have spent almost 2 to 2.5 hours for learning this simple dissolution and all. Basic introduction to partnership, partnership revision and dissolution introduction and dissolution in-depth simple introduction we have done. From the next class, we are going to do one single problem on dissolution, simple dissolution we will do. And hereafter, we will move on to Garner and Murray rule. We will learn the concept, do some problem on Garner versus Murray rule, and we will complete it. Then go for a third topic. We will learn the concept and we will solve some sums and the chapter is done. Are you able to understand?
Yes, sir.
Yes.
Yes, sir.
This is signing off of Sudarshan. Thank you. Have a nice day.